We are live. We are live. Good. Good morning. My name is Martin Poulsen, Managing Director of Acacia Sustainable Business Advisors. Welcome to the Institutional Investor Panel. I work in the advisory business. Acacia is an advisor in the natural asset space, advising fund managers, SMEs, NGOs, and public sector organizations on sustainable investment, generally speaking. I'm very honored and pleased to be here to play the role of moderator today. I'm broadcasting to you from a very sunny France, close to Geneva. The sun has not been here for a long time. It's here today. So this is a great, bright morning to have this conversation. I have a great panel here this morning to have this conversation. I'm really excited to go through this discussion. We've got institutional investor representatives in the form of MEAG and Ingka, some of the largest institutional investors in agricultural and forestry assets globally. We have a fund manager with us from Andriy, which is making guarantees and debt investments in the agri and forestry sectors. We have a banker from BNP Paribas, and we have a member of the DFI, Development Finance Institution community, in the form of Bio, the Belgian DFI, with us. So the conversation is going to be very, very interesting, I think. This is a long-standing asset class, or these are long-standing asset classes, which, as we've been hearing in some of the conversations today, are subject to change at the moment. Everybody still sees these as asset classes which are interesting from a pure investment perspective, from a risk-return perspective, but there are many other issues swirling around, opportunities and in some ways challenges around the question of climate change, carbon markets, sustainability, deforestation. So there are many things which are weighing in, reporting, which are making these investment in these asset classes more interesting, more complex, but also perhaps more central in how we see the world. So I'm really looking forward to this conversation. Everybody here has got slightly different perspectives on this, but a strong common interest in making investments in these sectors work. I'm going to ask in a second the panelists to introduce themselves. They'll have 3 minutes each to introduce themselves and their organizations. We will then go to a Q&A, and I will lead the Q&A with the panelists, and we will reserve time at the end for Q&A from the audience. So please do use the Q&A facility to post your questions. We will reserve time for that at the end. So with that, we're going to launch the introductions, and I'm going to ask in the first instance, Andriy from Ingka to introduce himself and Ingka. Andriy, over to you, please.
Good morning. Thank you, Martin, for the introduction. Thank you for the invitation to this event. My name is Andriy Hrytsyuk. I'm part of Ingka group. Ingka Group was formerly called IKEA Group. We are part of IKEA value chain, and our main business is retail. So we have, we are owning and running around 400 stores worldwide. And maybe it's important to notice that there's another big part of the value chain called IKEA, and the concept they produce, they design and sell furniture to retailers. So our group, we only retail, our main business retail. We have nothing to do with furniture production, and sometimes it's quite difficult to send this message across. So I'm highlighting. Within our group, we have the main business unit is IKEA Retail. Besides that, we have also Ingka Investments, where I'm part of. Within Ingka Investments, we have a number of portfolios, and forest land portfolio is one of them. I've been lucky to join the group in the right time, in the right place. So together with the colleagues, we built the forest land portfolio from scratch. Today, we own and manage 240,000 hectares in 5 countries. We invest in forest land because that's a resource that is important for the future of the group. Of course, you cannot make furniture without wood, even though we are not producing it. So we want to be present and invest in the resources, and timber is one of them. And that's why we are present in the areas important for the supply chain. Some countries in Europe, the Baltics, Romania, the US. Being part of the IKEA value chain, we share the culture and values, and that's why People, Planet, Positive is one of the objectives. And by investing in forest land, we do it in a responsible way, and we want to lead by example. Me personally, before joining the Ingka Group, I had experience venture capital fund, carbon trading, and plywood mill operation. So that's briefly about me, about my company. Thank you.
Thank you very much, Andriy, for that very clear introduction. Let me pass now to Nanno, Nanno Kleiterp, who has worn many hats of great relevance to this conversation in the past. Nanno, over to you, please.
Yes, thank you very much, Martin. Yes, so I'm Nanno Kleiterp. I'm chairing the board of the Green Fund. I will explain a little bit of that later. And I've been active in FMO as CEO of FMO and worked for FMO the last 30 years. And I was chairing the European Development Finance Institutions. And now I'm a lot busy in restoration and restoring forest and nature. In common lands and in different other activities. Maybe something on And Green. And Green is a fund we established 2 years ago. It is really focused on let's say, making the production of the commodities, the main commodities, deforestation free. So main commodities is palm oil, soy, meat, rubber, etc. So we are providing the companies with loans or guarantees, as Martin said. Our aim is to build up a portfolio of about 400 million US and mobilize 2 billion from other parties. The goal of the fund is to protect and restore 5 million hectares and to improve the livelihood of at least 500,000 small farmers. We have a jurisdictional approach, so that means that we operate in areas where the local government has real and verifiable targets on stopping deforestation and reducing deforestation. So we work closely together with local governments, with NGOs, and with the businesses, of course. Until now, we have invested about 100 million in Brazil and in Indonesia. That's in soy meat production and palm oil. In Brazil, we're the second biggest meat producer who committed to monitor and avoid deforestation in their whole supply chain. So that's they're reaching out to tens of thousands of small farmers, of small, medium-sized farmers, and the same with DSMG. That's a big palm oil producer, also committed to do that. So it's really really a breakthrough, and we want to show that this can be done commercially viable, and that we can attract and we can show that the model can be also interesting for let's say for institutional investors, and to build up a track record. But I think in the questions we will come back to that. That was it, Martin. Thanks.
Great, thank you very much, Nanno. Let's move onwards to Pierre from BNP Paribas. Pierre, please introduce yourself and just describe the BNP Paribas perspective here. Thank you.
Yeah, thank you very much, Martin. So my name is Pierre Rousseau. I'm a senior advisor for sustainable business at BNP Paribas. So mainly working on some piloting. So BNP Paribas is a bank, so what we try to do here is to use our resources, sometimes balance sheet resources, but also structuring resources in order to think about innovative funding. As you know, probably investors are majority passive investors, and if we have to attract more investors, we need to come out also with innovative in order to address a certain number of issues that investors have, which is about risk, so to de-risk, but also provide liquidity, as liquidity is a big factor. Provide also additional booster for return sometimes if needed in order to incentivize them, and incorporate also element in order to activate the fund, activate the return and lower the cost. So we are here really to find solutions. So we had in the past create products which were more like project finance type of product, like TLFF. I think Nanno knows it very well because we work together on that. So that's a very specific product, but very fine-tuned product also for specialist people. So you require a lot of time and the transaction cost is very high. So we need to work out of making something more simple. Today, we try to attract much more investors to create size. And we work on coalition by creating also type of fund, but we are not the people running this alone. So we create coalition. The latest one I want to mention is called the Subnational Climate Fund, which is gathering NGOs because it's been launched by R20, which is one NGO as a sponsor. We work with partners like IUCN, which is verified the nature-based solution of the project. And we have also Gold Standard, which is measuring the impact. And I think I will insist on measuring impact as a key factor. Then after that, we have an asset manager, which is Pegasus Capital. And then we have BNP Paribas acting as an administrative support, first for the custody and the clearing, but also bringing all connection with investors, corporates, and all the people working in the bank and helping to the structuring. And I think especially when we have to incorporate the carbon in the product. So you can see that today, if we want to attract much more investor, we need to create a de-risking tool because here the fund is de-risk as a first tranche by the Green Climate Fund by 20%. And on top of that, we have created the technical assistance, which is providing first technical assistance in order to launch projects, but also to the nature-based solution in order to measure the impact on the climate change, but also on biodiversity and also on people. And I would like to insist on the communities that are maintaining also those assets, because that's very important to take into account. And finally, to measure the impact. So I'm more than happy to go more in detail on this type of structure, which are helping probably to create much more project, but also to replicate project and to accelerate, because size and acceleration are key factors here in order to multiply the number of opportunities we may have.
Great, thank you, Pierre, very clear. We'll come back to some of those points. Let me turn now to Wendelin at MEAG. Could you also please introduce yourself, Wendelin, and MEAG's activities as it relates to this conversation? Thank you.
Yes, thank you very much, Martin. My name is Wendelin. I'm an employee of MEAG. MEAG is the asset manager of Munich Re Group, and Munich Re is the world's largest reinsurance group with 40,000 employees and operates globally. MEAG has assets of about 340 billion euros under management, and part of these assets under management are allocated and that kind of increasingly to what we call alternative or illiquid assets, among them obviously real estate since, let's say, already decades, but since just after the global financial crisis, so around kind of more than 10 years now, we are increasingly building up an alternative portfolio. Among these assets or within these alternatives are infrastructure, renewable energies and new technologies, but also forestry as known asset class since kind of 2009, and since kind of mid 2000s, we are also investing actively in agriculture. Today, we have invested more than 1.5 billion euros in these two asset classes. But again, forestry is makes up kind of two-thirds of the entire allocation to this asset class. We are So we have over 20 investments in our portfolio, more than 80 single assets that we hold. We have an investment exposure to more than 10 countries, and we have, let's say, roughly an exposure to more than, let's say, 1 million hectares, and own, I would say, roughly 300,000 hectares globally. Our investment focus lies today mainly in forestry, then on, I would say, the more, what I would call the more established countries, so mainly the US, but then also Australia and New Zealand. We do have investments also in Europe, especially on the agriculture side. But let's say from a forestry perspective, again, we are mainly focusing on these English, let's say, speaking countries, US, Australia, New Zealand. Yeah. So that's kind of in a nutshell our experience. We do leverage very much the experience of and competence of Munich Re as a reinsurance group, especially regarding risk assessment. So for example, fire, wind, these type of threats or perils. And then also they have a strong competence regarding climate change and try to kind of model these potential impacts and into our investment process and also into kind of managing these assets going forward.
Great, thank you very much, Wendelin. And lastly, but not leastly, on the panel, I'd like to ask Gaëtan to introduce himself and also bio and the bio perspective on this subject. Gaëtan, the floor is yours.
Thanks, Martin. Hi, so my name is Gaëtan. I'm working at the Belgium Development Bank. We are an institutional investor, but a bit maybe slightly different than the other, considering that we don't have a regulatory requirement as a bank like for BNP, so we can, let's say, take sometimes a more venturing approach despite assessing project like a bank. So we have 1 billion under management, which is small in the context of much bigger group. Our role is to be additional and basically trying to go where traditional commercial bank cannot yet be active. And I insist on the not yet, because our goal is to make project ready or mature enough, being the country in which they operate, or the size or the maturity of their institutionalization, so that local bank or international bank can progressively be active with those companies. We also provide technical assistance to enable companies to be, let's say, more institutionalized, being the way their internal process or also the way they manage their environmental and social footprint and how they can improve on that front. The size of projects on which we are active is quite small in the context of our panel. It's 1 to 15 million, sometimes 20 million per project. And in terms of agri and forestry, agri, we do perennial crop or annual crop. We can do both. We can do primary and processing of agri and value chain. And then when it comes to forestry, we can do basically forest, of course, but also the processing. We will not often invest in greenfield forest companies. And the key challenge for the forestry, at least in emerging market, less in developed market, is the land title and all what is related to long-term, let's say, relationship with local authorities, with smallholder, local communities, and so we always try to find the best way to integrate project with their local community, and if possible, integrating smallholder, being on the agri front or in the forestry front. That's it. So, and we try to help company to be ready for traditional investor coming in when they can be active in the country where we are active, which is Africa, South America, and Southeast Asia.
Thank you very much, Gaëtan. So we have this very interesting dynamic in the panel. We have large scale institutional investors who have been investing in these asset classes for a while. We also have some members of the panel who are providing catalytic capital, trying to encourage capital to flow to places where it may be less present, and thereby tapping into and doing things which resonate with the efforts being taken internationally to address climate change and other things. And I'm going to start the conversation now by coming back to Wendelin to give a bit more information on how, as an institutional, he's looking at investments into the sector. You gave us some good information on your portfolio already, Wendelin. As I understood it, there's a significant commitment to ag and forestry, although in the context of your total assets under management, it's still less than 1%, but it's significant amounts of capital. What I'd like to ask you to zoom in on, please, if you could, is just, and I made reference to this at the beginning of the conversation, how are things like changes in reporting obligations that groups like MEAG are facing? How is the need to be addressing climate change, and how are changes in technology, both in your portfolio management systems, I suppose, and also in the way you can monitor your portfolio? How are they changing how MEAG looks at this part of its portfolio, the forestry and ag component of the portfolio?
Right, so kicking off with the reporting part. So I think, just over the course of the last kind of 1.5 years or maybe 2 years, kind of driven by the so-called Green Deal and the EU taxonomy, we are facing kind of today, significant changes from a reporting perspective. So both, the requirements of the EU taxonomy are of great importance for us. We are, I've actually never experienced in my organization that the topic of ESG is kind of cross-cutting through all of the asset classes that we manage. So infrastructure, real estate, etc. So we put great effort and invest resources now in establishing reporting to fulfill these requirements that are coming to us that have to be fulfilled by us as a large institutional investor, having to report on detailed criteria around along the 3 pillars of sustainability. So both from a social perspective, certain economic kind of indicators, but also obviously indicators like greenhouse gas emissions, etc. So there's a flow of or great kind of regulation and reporting overlay that is coming that we need to deal with. Another kind of important regulation in this context is the so-called sustainable finance disclosure regulation, which we have to also implement. And again, now MEAG as an organization is working intensively then with all of our asset classes to make this work. And it's, to be honest, not easy, just given, again, the complexity of our portfolios, thinking about private equity investments with dozens of indirect investments, for example, but also on the real estate side and infrastructure side, both equity and debt investments. So there's a great complexity that we need to face here. From a technology point of view, technology, I think, is certainly helping us actually to understand and be able to report actually on the entire portfolio. And I'm not thinking about forestry and agriculture only, but also the asset classes. So we are kind of forced now, or we need to be able actually to, for example, report on certain impacts of climate change on the entire portfolio of Munich Re, meaning, or of for Munich Re, and also obviously group external investors. And that's a great challenge. And there I think technology plays an important role to be able to automatically source information on, let's say, talking about forestry again, on I don't know, carbon, for example, stored on certain acre in certain or hectare on certain country, and be able actually to report this up the chain, be able to display actually where do you invest or hold certain investments, you know, where do you hold actually forest investment, or where do you hold a wind park, maybe a hotel next doors, and what impact does climate change actually have on, you know, these three assets, which sit in different asset classes, which are managed by different teams, and, you know, but again, from an investor perspective, I mean, agree, as being one of our investors, they want to obviously know where are these assets, and what impacts does my portfolio have then towards, for example, certain changes of climate change. So let's think about increasing hurricane risk in the US South, and we could face a situation when asset in, for example, Texas is hit by a hurricane, you have a hotel next door and a wind park, and you actually realize only after the damage that you have all of these assets in one spot. So that's, you know, so these are kind of driven, you know, so these are issues, I would say, they're cross-cutting between reporting, you know, technology on, you know, how can you kind of display and just report on all of these information without, you know, without having errors in the data, without having somebody typing into Excel files, you know, with, you know, just a high level of uncertainty there. And what does climate change do? You know, so so just to kind of touch upon some of these points that you have mentioned. So that's kind of driving us very much at the moment.
Okay, very interesting. And I am going to ask questions to each panelist, but if other members of the panel would like to say something on a leading question that I put to another panelist, please do add your comments. You know, it's good if we have turns into a conversation to the extent that people have things they'd like to add. So feel free to add things, other panelists. Whilst you think about that, I can see some questions coming in already. That's great. We'll save those for a bit later. I think I'm going to come to Andriy now and just pick up on a point that's been already raised just now, which is the geographical point. We have a well-established plantation forestry investment industry in the developed markets, Europe, US, Australia, New Zealand, already referenced in this conversation, but there are also other parts of the world, Latin America, Africa, and other parts of Asia, where there is tremendous potential opportunity. The question I'd just like to address to you, Andriy, is there sufficient asset available, if you like, in Europe and North America for you, or is there a need either now or in the future to look further afield into other markets, which in fact are the markets that people like Gaëtan are trying to catalyze investors to move towards?
Yeah, thank you for the question. There are a few aspects in the answer. I think from our side, we've been in a very luxury position to have deep pockets, so we can always invest more in the forest land than we could find opportunities. Luckily for us, we have 20 billion management that we want to diversify from financial investments into real investments, renewable energy, forest land. So from that perspective, you don't have enough investments in a way, but it's also, you just need to be patient and wait for the right opportunities. And forest grows slowly, and then you can, the portfolio, you shouldn't rush it, then the right opportunities will come to you. So from that perspective, yes, I wish we had more opportunities, investment opportunities. And for us, in practical reasons, the way we do it in very controlled way. So for us, it's very active investment. So when we open a new country, it takes some time to set up organization and how you manage it. It doesn't have to be that you need to have the team on the ground, but you want to be involved very actively how you manage it. In the US, for example, we have a commercial manager, but we have weekly calls, we make a lot of decisions, so we want to be involved in how we manage that. And that takes time. So for us, yes, maybe the way to expand the portfolio is to look at a new country, but we do it, one country in 2 years or something. But to add to the answer, I think the other way to look at that is to maybe think of expansion not geographically but by the type of investments, and we identify a new way to look at the forest land investment, not from a pure commercial forest land as it is today, but from a forestation perspective. So we are looking, we are in the final phase in one first transaction in a new country that probably will have details later once it's closed, but it's totally new approach to us. We are willing to take slightly different risks to add more value from sustainability perspective. I think what's also unique in our approach is that most of those investments in that country are driven by carbon price, and we have the luxury of deep pockets, and we take extra commitment not to monetize carbon. So for us, we have slightly unique approach from that perspective. We can accept a bit lower return, and we can deliver good impact without selling carbon in this case. So that's something where I see further expansion. I wish we can identify more further opportunities in different countries. Due to some practical reasons, we have capacity constraint to look at each country. So if participants have any great ideas, opportunities in countries where we are not present, I would be glad to look at that together with you.
Okay, that's a great. Thank you, Andriy. That's a great segue, if you like, into the next part of the conversation. And I'm going to come to Pierre in a second to talk about carbon markets, because they're a key part of this. But before that, Nanno, I'd like to ask you, as with Andriy, you have a very important catalytic role to play here. In your introduction, you talked about the importance of firstly doing good deals and having good impact, but you're also there to catalyze. So it'd be great if you could just talk about, I mean, that's almost an invitation from Andriy, I think, to deploy your capital in a catalytic way. But can you also just talk a bit about the sorts of barriers that you can help to address, and what are indeed the barriers that the way you see it for some of the institutionals for deploying capital into some of the countries and markets where you're operating?
Yes, thanks, Martin. I think that's a very important question. So if you look at how we are, let's say our investors until today, we started with the Norwegian government. That's with NICFI, with the Ministry for Environment. They really gave us the seed capital. Unilever joined us because, of course, they are very interested in the off-taking palm oil from companies that are doing that deforestation free. Hannover Re is investing, let's say, not yet on a completely commercial basis, I suppose. It's more a thing that they want to get experience and build it out. And then we have FMO as one of the investors. So we were able already to raise about 200 million, want to raise 400 million. And we are in discussion, of course, with a lot of institutional investors. And the big risk of course, what is special about Andriy, we are focusing on tropical forest and tropical areas, at least agricultural production related to deforestation in tropical forest. So we are focusing very much on Brazil, Indonesia. We're also looking at Africa. And that for institutional investors is already a high risk in emerging markets investing. So that's the country risk as such. Then what we see is, of course, the agriculture is a high risk because the world market prices, all the financial risks that are involved. And I think it was mentioned by one of the other speakers. There's risk of land tenure is an important part when you're talking about forest and agriculture, indigenous people. IFC performance standards in general are complicated and contribute to a high operational cost. So we see a lot of risk. So what we're trying to do is, let's say we have the blended money from the Norwegian government, so that already reduces the risk. So we can leverage over this blended money, so that you have a kind of first risk coverage. I think Pierre talks about it in another case. With the Green Climate Fund, we also would like to get them in, but we have now the Norwegian government. That's the first risk. So that makes it already that we reduce the risk. Then, of course, we as in Green, being specialized in these areas, are able to manage, let's say, the reputational risk. That is the relationship with we get the big NGOs involved, or also local NGOs involved, in order to manage and contain the reputational risk, knowing what we're doing and complying with IFC performance standards in the best way that we can. So that's a way that with the expertise and the competences we have, we can reduce that risk for investors, because talking also to pension funds, that is a big risk. So that's the whole picture. And what we see is what of course every investment is requirement is track records. So we see that this is our first fund. With the blended finance, we hope that we can get in others, and then in the second phase, that with the track record, we show that we can do this with good companies, with good investments. Let's say the financial risk and reputational risk very well managed. That then it becomes attractive also for institutional investors to invest with less or without a blended finance.
Great, thanks. Thanks very much, Nanno. I mean, that's a very practical set of elements to making these investments normal, if you like, and bringing capital in from the broader institutional community. So thank you for that. Let's keep on the same theme with Pierre here a little bit. Pierre, it'd be great if you could also, from a banking perspective, just tell us a bit about how you see the interest from conventional investors, and what role the carbon markets potentially can play in that. We've just timing wise, we've got about 5 minutes left for the panel before we come for Q&A. So if you do have questions, put them in the chat now, please. But I'm going to do this question for Pierre first, and then I'll come to Gaëtan afterwards, and then we'll go to the general Q&A. So Pierre, please just tell us a bit about how you see conventional investor interest and how carbon markets may influence that or help with that, in fact.
Okay, so I will leverage on what Nanno say. So the blended finance is something quite important. First of all, we need to realize that conventional investors, they're still the one that we have to convince to enter in that business. Some of them have already started, like we have seen an example before with MEAG, where we have some people who have built up their own operation. Then we have people who are creating specialized setup, like we have seen with Nanno. And after that, we see the corporate also, which are entering in the investment community, and the high network. We need to add probably also the high network individual. But when we are coming to the community of the asset owners, it's still in regards of the size they do represent in the world and the money they manage, they're still very far away. They're still far away from this. And it's all because the same things. People don't like greenfield, people don't like uncertainty. So we start to de-risk. So blended finance is something quite important to put in place. But the people, we need to realize that those people need also to change the policy of investment. So that means there is a practical rules also as a private, you have a lot of constraints that the people need to overcome. And also the size is important. So we have a double things that we need to create. We need to create return, we need to create interest, we need to cover the risk, we need to cover liquidity, which is also becoming also an important factor. So we need liquid assets. And most of the time, I saw that the name that my colleagues have there is illiquid assets. So we have also the interest to have liquid assets. And at the same time, we need to finance a transition. This is what also is important, because if you have to do an activity of forest alone, it's not just the forest alone, it's activities in the forest, it's agroforestry, because you have to create an economical value. What do you think that the countries today cut the forest? It's because they don't have a return on it, okay? And it's better to have a concession to do agriculture in order to invest in the forest. So if we want to show and we want to demonstrate, we need to demonstrate the economical value of the forest, okay? And that means we need to create activities around that. And there are plenty of them. Bamboo is a very interesting one, coffee, cocoa, we can rebuild cocoa, which has been destroyed in some area, in some countries. There is a medical plants, etc. So it's very important that you rebuild. So we think about a landscape. And we have also to think about not taking the forest alone. We need to bring it as an economical value. I give you an example. We can use when we have an agriculture, we can use the biomass to generate electricity. So we mix electricity generation with the management of the forest. So we have to finance not only an asset, but we have to finance a landscape. And last but not least, carbon will contribute to that, because if we can additionally count the capture of carbon, then we can also monetize it today at a voluntary basis or through a different mechanism existing. But the carbon need to be integrated as one of the components, like subsidiaries also could be, in order to finance the transition and also to finance the maintenance of the people to keep on the ground the project on the long term. We are talking about long-term project here. We are not talking about short term like we usually do in finance. And so if we can bring the economical value of that, we will see that the economical value is much higher. It's much higher than normally what we have. And then we'll interest the investor. So if we manage the risk by the blended finance, if we measure the impact, which is very important also, the ability to measure the impact. And if we do prove after financing the transition through a blended finance model, that the profitability of that will be higher, and we can at the same time maintain the operation by funding it on a resilient way, then you will interest investors. And carbon will play an important point. It's not just carbon that's not to be used just to the credit carbon to offset the credit carbon of a company, because that's not only to be used as a tax, it has to be used also as a tools to finance the resilience of the project. So that means we need to create, and we need to think out of the box. It means that we just need to limit everything to the forest, to the agriculture, but we have to integrate that in the economical and social resilience that we are creating on the ground. And this can include electricity generation by biomass. It can integrate biochar, when we can recreate fertilizer out of biomass through, and then increase the productivity of the agriculture around. So it's going to new business model, integrating the nature and integrating the externalities in the model. This is the key point. And if you do that, you will see that your economical return will be higher and your social impact will be higher. And so this is what we have to try to build up. Yeah.
Thank you, Pierre. That's very interesting, and particularly, the way you've highlighted the diversity of the investment opportunity. It's not just simple forestry and simple ag. There's a whole series of opportunities which also reinforce the viability of the other components in the picture. Good.
Martin, can I just add quickly to this? I think something that one has to really kind of consider and just understand how an institutional investor thinks is, the reasons for us to invest in forestry and agriculture is because of course we want to diversify, but we want stability and let's say de-risk our portfolios. So something that we don't want is going into, let's say, forestry and agriculture and adding risks actually by currency, exposure to, I don't know, multiple products, if you think about everything that some of the topics that Pierre also mentioned, I think they're great to diversify, but again, they also, increase volatility. Then, lack of an index, you don't know, there's one index globally also for forestry, and that's a US-based index, and there's one agriculture index, the NECREEF Farmland NECREEF Timberland Index, but that's it. There's a whole kind of set of shortfalls, I think, for an institutional investor, especially, maybe South America lesser so, but then Africa and also kind of Asian countries, that would just prevent us from investing there, because we do forestry investments, we do agriculture investments, to have a risk-adjusted, low volatile return long term. And I think some of these regions, at least from our experience, only currencies. You think, we have an investment in South Africa. It was a nightmare from a currency perspective, and that's exactly something we don't want, So I think that, we have been talking, Nanno has been touching upon
I agree with you. This is why I mentioned we need to package that into something which is taking care of all the different constraints that you manage, including, for instance, the liquidity. Yeah.
Okay, no, a great perspective. The importance for you, Wendelin, and as an investor, of simplicity and clarity. I don't think they're necessarily conflictual with what Pierre is saying, but you're operating at different levels, perhaps, of a related market. I want to come to Gaëtan, and by the way, we've been given a 5-minute bonus in terms of time, so we have another 13 minutes for the panel. So that's a good sign. Gaëtan appears to be the most popular person in the Q&A as well. But I want to, so Gaëtan, if you want to answer any of those questions in the Q&A as part of your answer to my question, that's great. What I'd like you to talk about, particularly based on what Wendelin was just saying, what are given that one of your key geographies, it's not the only one of your key geographies is Africa. What do you see as being the prospects using the tools that Bio has at its disposal, alongside the other DFIs, of course, for mobilizing capital, perhaps of the type that Wendelin is trying to deploy? Are there ways that you can simplify things, take out risk for investors like him, and ultimately bring more institutional capital to Africa, a subject that's very close to my own heart as well? Gaëtan, what would you have to say about that?
It's perfect. So just for your info, I used to work for a big asset manager in Europe, and then I moved to South Africa to manage a niche asset management company focusing on listed Africa, ex-South Africa equities, so very illiquid assets. So I can relate to Wendelin when basically saying we need liquidity, we need depth of the market, because if the minimum ticket size of an institutional investor, even coming into a fund, is 10 to 20 to 50 million, then you have really a challenge there to be able to be active in those markets. What I can also say is that, and that relates to a point of Andriy, is the ability to find enough project for the amount of capital that would want to be deployed in the forestry and maybe even in the agri space. Sometimes we start to see, as a development bank, some non-rational investor coming in and distorting the market. It's great because it means more capital available, but sometimes valuations are just crazy when you have the right marketing approach towards impact investor and forestry sometimes, because you can see that various funds have been launched in that field, and sometimes it's, to me, I start to say I'm no more additional, that I don't need to go there because there are apparently sufficient interest. How can we make investment more accessible to institutional investor in less liquid markets? It's basically you have a part of the pocket of those large investors, like endowment fund in the US. They clearly have made the step. When I was 10 years ago trying to raise capital in listed equity outside South Africa, in Africa, they start to allocate some pockets for diversification reason, because the correlation is totally different with the rest of the market. And I think that links to Wendelin's point is, yes, you have some different risks, but if they are different, it's fine because they're diversified and they are non-correlated. So I think you need to be able to prove that the correlation is there, because more risk from the moment that it's a totally different risk is fine as well, at least to my perception. What we do to make also other investor more accessible is attacking projects that are small and that can become big. So for instance, one company that we worked with a lot, and our first loan was 800,000, I think, euro to the company, was Niche Cocoa in Ghana. And now they start to have like, it's a multi-million company, one of the major players in Ghana, and it's working with thousands of smallholder in the cocoa industry. So what we need to do is try to nurture with long-term funding entrepreneur companies, so that after they can have access to next round of funding with larger and more institutional traditional investor. So it's a long answer, but I hope I answered to quite a few of the question. And why don't we do greenfield? Because I've seen that question quite often. If you want to combine greenfield with Africa or emerging markets, and you start to pile up, let's say, risk, it's very difficult, and you need to have boots on the ground. We are a long-term patient investor, but not being an active investor. So we want the company and the entrepreneur to manage his business, and we are coming to support him with long-term capital so that he can reach the goal that we help him to reach. So that's why greenfield is extremely difficult to do.
Okay.
For us.
Great, thank you, Gaëtan. I'm going to draw a line under the conversation amongst the panel members and move to Q&A. But before I do that, are there any quick comments from panel members just in reaction to things that have been said by others before we go to the Q&A? If not, then let's do that. And there's several questions on carbon markets. Carbon prices are rising, as we've all seen, particularly in Europe. They're going up, which is a positive factor here. There's one question which is directed to you, Andriy. So maybe you can take first go at it. To what extent does the carbon markets influence the way that you're working and the investments that you're making for Ingka?
Yeah, as I mentioned, first of all, we still need to wait for the methodology for carbon accounting in the forest land that is due in a few months. How it will play out and how it will connect in the world. But in general, if you think, maybe I would like to elaborate why we took a stance not to monetize carbon credits, because in a way, we believe that if you sell carbon credits, someone will buy them. And usually that will be a steel mill or cement mill, and we don't want to have an easy way for those big emitters to go by. So we have ambitious targets, we have capital to support, so we don't have to monetize it, and we believe that we need to make real changes and really get to climate positive. And carbon credits may stall the process of transitioning the energy, transitioning all the industries to carbon neutral world. So from that perspective, carbon price doesn't have any big impact on what we do.
Okay, thank you. Other comments on carbon?
I would like to add maybe that carbon can be used not only to add credit to the company, but also to fund the transition, to fund the maintenance of the assets, like the smallholders. If we pay back to the farmers, or to the smallholders, or to the fishermen, then after that they have an additional incentive to maintain the forest. And I think we need to think also about that aspect, about the use of the carbon, not only necessarily as a credit carbon for a company to reduce and to achieve its net zero.
Yeah, I agree. If that goes back to good causes, maybe we'll change our decision.
Okay.
Happy to talk about it. Yeah. Because we are even putting in place mechanisms where we know that the carbon price will go up, to make sure that when it reaches a certain level, the people who bought the carbon can pay back the even more money to the people who are maintaining it. Because this will also create the resilience of the maintenance of the carbon. And so it's a guarantee of the maintenance of the price. So I think we need to start to be innovative about all this and not just to keep it as a credit carbon being traded on the spot market. Yeah.
Mm-hmm. Great. We've got a time maybe for one or two more questions. There's one interesting one here, which is rather general, but the question is there a place in forestry investment for equity, or is it simply too hard to get exits when you use equity instruments? Would anyone like to comment on that issue?
Well, maybe I can. Let's say what we do in forestry and in the kind of investment, which is long-term investments, is in reality more quasi-equity, self-liquidating instruments, because let's say it's very long-term. No, if you put in equity, so for private equity funds, the term is too long, because you need 10, 15 years or 20 years at least, no, to reach your return. And there's high volatility in emerging markets. So using, let's say, loans with an upside, or subordinated debt, or let's say convertibles, I think that's a better instrument than straightforward equity for most of the investors.
Yeah, I don't know. From my viewpoint, in the established markets, there's no issue with exiting an investment. So for example, in whatever the US or Australia, New Zealand, there's an active market, and you can exit. Obviously, yeah, maybe you can exit an asset whenever you want, So, and as long as you have control, and I think that we are aligned with what Andriy just said, and Acacia's philosophy, we want to have control, and if you have control, you can, determine when to enter and exit the market. And again, for other regions, and we have experienced this also for example, in an Asian country, but also again in an African country, and it can be very difficult to find an appropriate buyer for an asset. And that's again something that is again adds to or should be considered as a risk premium in my perspective. And maybe just to circle back on what Pierre said on carbon and others said on carbon, I think where carbon plays an important role, especially with afforestation. There it just bridges also liquidity gap for investors. So you have possibility to get upfront cash and not wait, 20 years, and no investor. For example, in Munich Re, we are listed. We have, we have dividends to dividend targets. I can't say to my investor that you'll see something in 20 years, and otherwise you live from total return or IRR. This is not enough, So I think especially there, carbon plays an important role. And otherwise, I also agree with what Andriy said. We don't want to sell off carbon credits from existing portfolios, because you sell a credit once in your life, or maybe 2 lifetimes. So I don't know, over 100-year period, for example, at a certain spot market price, and thereafter you have to maintain certain carbon levels, and you restrict your freedom of management. So one has to very carefully consider when to monetize on carbon in kind of brownfield investments, so existing forests. And there are certain assets which lend itself better than others, for example. Yeah.
Great. Well, it feels like we're really kind of just scratching the surface of a very deep and fascinating subject. Unfortunately, in this panel or this conversation, that's more or less all we've got time for. Are there any final remarks that people would like to make on the panel before we wrap up?
Well, maybe I think it was mentioned by Pierre. I think on the whole measurement issue, I think that is becoming more and more important to have standardized measurements. Of course, the EU taxonomy is helping there, but also to put in place, let's say, the measurement of what we at Green are looking. So how do we prove that our actions are related directly to conservation or preservation of forests, because it's becoming more and more for impact investors, but in general for investors, the social outreach, how do we benefit? So we are working on those methodologies. And I think in general, to get investors in, standardizing the measurement and being very transparent about it, and it's also a learning journey because we are not there yet. I think that's a very important topic for investors, but also for the companies that are doing it to get that data and trustworthy data.
Okay. Great. Really good conversation, gentlemen. Thank you so much. And, I think we can all see that this is and will remain a crucial sector for both simple investment and commercial reasons, but that there are also tremendous opportunities. There is still complexity around a number of things, as Nanno was just saying, but many people are working on those and simplifying those. Role of blended finance and trying to pass the risk and attribute risk to places that's willing to accept it remains super important to open up the flow of large sources or large amounts of capital into this sector. So what I sort of take away from this is that around the table here we've got a number of representatives of crucial components of this ecosystem, which will hopefully work closer and closer together as we as investment in this sector matures in a certain sense and becomes more mainstream. So if we can all just give a great virtual round of applause. Thank you very much to the panel. Thank you, gentlemen. It was really good. Wishing you a good continued day at the conference, and I think we'll close there. Thank you very much.
Thank you.
Yeah, thank you. It was a nice discussion.
Thank you.